Long-term care insurance is a type of insurance designed to help cover the cost of extended assistance for people who can no longer fully care for themselves because of aging, chronic illness, disability, cognitive decline, or a serious medical condition, unlike traditional health insurance, which is generally focused on doctor visits, hospital stays, surgery, and short-term medical treatment. Long-term care insurance is meant to address a different kind of need. It helps pay for ongoing support with the ordinary task of daily living when a person needs help over an extended period of time. This might include assistance with bathing, dressing, eating, using the bathroom, getting in and out of bed, moving around safely, or managing memory-related challenges. The central purpose of long-term care insurance is to protect a person's savings and provide more choices about where and how care is received. Many people assume that if they become elderly or seriously impaired, regular health insurance or government programs will automatically pay for whatever care they need. In reality, long-term care often falls into a gap that surprises families. Health insurance usually covers medically necessary treatment and recovery-oriented services, but it does not typically pay for ongoing custodial care when the main need is to help with daily activities rather than medical intervention. Medicare also has limited coverage in this area and usually does not pay for extended custodial care in the way people often expect. Because long-term care can last months or even years, the cost can be substantial. Long-term care insurance exists to help fill gaps and reduce the financial strain that prolonged care needs that place on individuals and their families. The need for long-term care can arise gradually or suddenly. Some people require assistance because of the natural effect of aging, such as reduced mobility, frailty, or memory loss. Others may need care after a stroke, an accident, a neurological condition, or the progression of a disease such as Alzheimer's or Parkinson's. In many cases, a person does not need hospital-level treatment, but does need regular hands-on help to remain safe and functioning from day to day. That kind of support may be provided at home, in an assisted living community, in an adult daycare program, in a nursing home. Long-term care insurance is valuable because it can help pay for care in a range of settings rather than tying support only to type of facility. One of the most important ideas behind long-term care insurance is preserving choice. Without coverage, a person who needs assistance may have to rely entirely on family members, quickly spend down savings, or choose care based only on what's affordable rather than what is best. With insurance in place, there may be a flexibility to hire home healthcare aides, pay for services that allow a person to remain in familiar surroundings, or choose a higher quality care setting. For many people, staying at home as long as possible is a major priority. Long-term care insurance can support that goal by helping cover in-home care, which may include help with personal needs, mental preparation, supervision, and basic household tasks related to the insured person's condition. Policies differ, but long-term care insurance generally begins paying benefits when the insured person meets certain eligibility requirements. A common standard is the person must need help with a specific number of activities of daily living or must have a severe cognitive impairment that requires supervision for health or safety reasons. These activities of daily living are used as a way to measure functional ability. If the insured person can no longer perform enough of these tasks independently, the policy may treat that as a qualifying event for benefits. Cognitive conditions can also trigger eligibility, even if physical abilities are not yet severely limited, because confusion, wandering, and impairment judgment can create serious safety concerns. Long-term care insurance is often structured around several core features that determine how much protection it provides. One is the daily or monthly benefit amount, which is sets the maximum the policy will pay towards covered care cost within a given time period. Another is benefit period, which defines how long the benefits can last once the claim begins. Some policies provide coverage for a fixed number of years, while others may offer broader protections depending on the contract. Another important element is the elimination period, which works somewhat like waiting period or deductible in time rather than money. During that period, the insured person must pay for care out of pocket before the benefits begin. There may also be inflation protection, which helps the value of benefit keep pace with the rising care costs. Because long-term care expenses tend to increase significantly over the years, inflation protection can be one of those most important features for someone buying a policy well before retirement. The cost of long-term care insurance depends on many factors. Age at the time of purchase is one of the biggest. Generally, the younger and healthier a person is when applying, the lower the premium is likely to be. Health status also matters because insurers are underwriting assess likelihood that the applicant will need care in the future. Someone with significant medical issues may face higher premiums, limited options, or even be denied coverage. The design of the policy affects cost as well. A large benefit amount, longer benefit period, shorter elimination period, and stronger inflation protection all tend to increase premiums. The challenge for many people is finding a balance between affordability now and meaningful protection later. Long-term care insurance is often discussed in the context of retirement planning because the potential need for care represents one of the largest financial uncertainties later in life. People may spend years building savings, investing for retirement, and paying off a home, only to find that extended care need could consume a large share of those resources. Even families with substantial savings can feel the pressure when faced with ongoing home care bills or nursing facility costs. Insurance can help protect those assets and reduce the chance that a spouse or children will have to care for the full financial burden. It can also make it easier for family members to act as loved ones rather than full-time unpaid caregivers, which can be emotionally and physically exhausting. There's also an important emotional side to long-term care planning. Few people like to imagine a future in which they may need help dressing, bathing, or remembering where they are. Because the subject is uncomfortable, many people delay thinking about until a crisis occurs. But by then, it may be too late to qualify for coverage, or the cost may already be in motion. Long-term care insurance is partly about confronting an uncomfortable possibility in advance so that the person and their families are better prepared. The preparation can reduce stress later and make difficult decisions somewhat easier at a time when emotions may already be high. At the same time, long-term care insurance is not the right solution for everyone. Premiums can be expensive, especially if purchased later in life. Some people may decide they have enough savings to self-fund future care. Others may prefer hybrid policies that combine life insurance or annuity features with long-term care benefits. There are also individuals for whom premiums are simply not practical within their budget. The value of long-term care insurance depends heavily on a person's financial situation, a family structure, health, and goals. For someone with few assets, paying years of premiums may not make sense if other public assistance options would eventually be used. For someone with significant assets but not unlimited wealth, insurance may provide a useful middle ground by reducing exposure to potentially very large expenses. Understanding the limits of long-term care insurance is just as important as understanding its benefits. Policies have definitions, exclusions, and conditions that must be reviewed carefully. Not every service will be covered in every setting. The policy may require a plan of care, licensed providers, or periodic assessments. Premiums may also change over time for classes and policyholders, depending on the product and the insurer's history. Because of this, buying a policy should not be treated as a simple transaction. It should be part of a broader financial and care planning conversation that includes projected retirement income, family support, estate goals, and personal preference about where care would ideally be received. Long-term care insurance also serves a broader purpose by supporting dignity and independence. Needing assistance with basic functions can make a person feel vulnerable and dependent. Having resources available to arrange care on one's own terms can help preserve a sense of control. It can also allow a person to remain in a familiar environment longer, receive professional support, and reduce resilience on exhausted relatives who may be trying to juggle caregiving with work of their own families. In this sense, long-term care insurance is not only about money, it's about autonomy, dignity, and quality of life during a period that can otherwise feel uncertain and overwhelming. In the end, long-term care insurance is a planning tool for one's life's most difficult and often overlooked risk. It is designed to help cover the cost of extended assistance when a person can no longer function independently because of age, illness, disability, or cognitive decline. It differs from regular health insurance because it focuses not on acute medical treatment, but sustained personal support over time. By helping pay for home care, assisted living, memory care, or nursing care facility services, it can protect savings, expand care choices, and reduce pressure on family members. For many people, the true value of long-term care insurance lies in the stability it can offer in an unstable moment. It cannot prevent aging or illness, and it cannot eliminate every hard decision. What it can do is provide a financial framework that makes sense for most, more accessible, and future planning more realistic. For those who want to prepare for the possibility of needing help later in life, long-term care insurance can be an important part of building a more secure and thoughtful plan for the future.